All right. So you're welcome. Now, for those that are in the VIP group, yeah, this is another method of trading for the touch stroke no touch. This is the one we're going to be talking about probably later this evening or this night or maybe tomorrow. Depends, right? This the touch stroke no touch, the longer duration. Remember, we talked about the 2 minute duration. This one is the longer duration. As you can see, it's just doing your analysis properly and then putting, of course, I'm predicting, I'm saying that the market is not going to come down to touch this my barrier here, and then I have like 1 hour 16 minutes remaining. And then what did I see on volatility 25 index? Why did I take this trade? Now I'm going to be showing us why I took this trade. Let's look at volatility 25 index right here. So this volatility 25 index, right? So let's see why I took this trade, right? I'm putting the barrier down here. I'm saying that the markets will not come to this level in the next 1 hour and in the next 1 hour 16 minutes, right? I actually took a 2 hour uh actually took a 2 hour long trade, and as you can see, the market is really doing this bullshit as it's doing. So why did I take the trade? Right, so let me show you why I took that trade. Now I started my analysis from the 1 hour time frame. Now it depends on the duration you want to use. If I'm using like few hours duration, I will not be using the 4 hours and the 24 hours time frame to do my analysis. As you can see, the market is really a downtrend. As you can see, of course, you want to be, again, if you are trading this thing, you have to be following the trend. But I actually traded against the trend, and I have my reasons for that. As you can see, lower low, lower high, lower low, lower high. We have what? Lower low here, lower high, lower low, lower high, lower low, lower high, and then lower low. So what are we expecting? And that is why I took this trade. We're expecting what? A lower high. As you can see, guys, this is just simple market structure, guys. We are expecting here a lower high. So I am actually trading the lower high. I'm actually trading the lower high, and that's why I took the trade. Now let's go down to the 15-minute time frame. Let's see more. Let's see more. Let's go down. Let's dive down. As you can see, it's still the same thing it is telling us, right? As you can see, from here we have our lower low, lower high, lower low, lower high, lower low, lower high. Then we have what? Our lower low. What are we expecting to see? What? A lower high, right? And then, of course, today I told you we are talking about other blocks. So we are going to understand why I think at least the market is going to come to this my other block right here, and because there's actually a fair value gap right there. We're going to be talking a lot about that here. And as you can see, I am already doing well in this market. Of course, I do not want now. What is really happening here? Let me show you what is currently happening here. Why we have this push here? Let me show you. All right. So let me go down to the 5-minute time frame to show you guys clearly, because trading is just, you just need to understand. A market structure is just the key, right? It's just the key, as you can see. So if I'm going to the lower time frame here like this, I can see this as this. Let me just go down. Let me see to the 1 minute actually. Let me go down as much as the 1 minute. Now, on the 1 minute, I can see this as this. I can see my lower low. I can see this high. I see this lower low, lower high, lower low. I see this lower high, and then break of structure here. This is my lower low, right? And then I'm seeing what? This high, this low, and then change of character here, right? Change of character, and then look at this, and then we have this change of character again. Now, I saw this change of character. That was where I took the trade. I told you it's a 2 hour long trade. Now we already have another change of character here. But I think the market is still going to give us another change of character and give us this push to the upside like this. All right. So this change of character actually, or what I'm going to just categorize this as, if I'm to do this properly, is just to see this like this. Okay, this is not the lower low. This is the lower low, lower high. And this is the lower low, and I can call this like this a lower high like this, or use this and see this as one. And then we have not actually had the real change of character here. So I still expect this market to go up like this, and that is what's currently happening. Again, my barrier is down there. It's down there. As you can see, it is down there. I'm saying the market should not come right down to this level. As you can see, it's just the same thing. As you can see, I'm already in profit in this market. So I know, because I understand my what? I understand my market structure, I'm able to take this trade confidently. And it is here I took the trade when I see my change of character here. That was my entry signal. That was my entry signal. So you really need to understand all this thing properly. And then when we start understanding other block and fair value gap, we are going to really understand this whole thing even properly. All right. So we're going to understand all this properly. Hold on 1 minute, please. Let me. So let's go down to the 5 minute and see what is happening on the 5 minute. Let me see if I can just do this analysis here on the 5 minutes to see a clearer picture here. So on the 5 minutes here, I can see this as my lower low, lower high, lower low, lower high, lower low, change of character, guys. Change of character. Once we have a change of character, we're expecting what? This to give us what? An uptrend. In an uptrend, we have what? Higher high. We're expecting that. So what is currently happening here is higher low, and then we're expecting what? A higher high like this. Very, very amazing. Very, very amazing. And if you can see, hold on, I am just targeting how much? I'm targeting just 13%, right? 13%. Imagine making 13% of your capital every single day. Let's say you have $100, you're making $13 every day, right? You're making $13 every day, which is amazing, guys. Which is amazing, right? It's a whole lot. So those that are really asking, can we actually do this, right? Concerning the challenge, can we actually make this happen? Yes, we can, because we understand market structure. We understand the whole thing that's happening. And then with this touch stroke, no touch, guys, we're not even using now for those that are in the VIP group. The only thing one we have talked about is the 2 minute strategy. We are not even using the 2 minute strategy here. As you can see, I'm already making 7% here already. I could choose to just sell this and take my 7%. It's as simple as that, guys. As you can see, I could actually literally target more, right? I could target more, but then I don't want to target too much. I'm just, guys, I could take 10% or 13% like this every day. And I'm going to take this. It's a 2 hour long trade. I'm just going to take 3 or 4 trades like this, and I'm going to have 40%. I'm going to have 40%. And this is a very safe kind of method of trading. It's a very safe method of trading. Guys, it's a very safe method of trading. All right. So it's as simple as that. You can even say, okay, you can have like a 10% stop loss. So once you have minus $10 there, you can just sell and take another trade. It's as simple as that. You don't have to stress yourself. So let's do another analysis before we go into what we have for us for today. So if I'm to take another trade on this touch stroke, no touch, longer duration, how would I do it? All right, so I'm just going to check another market here. Let's see volatility 10 index. Please, guys, are you following me here, please? Are you following me? Are you following me, guys? So I'm going to start, because I'm using hours duration. If I were to be using more like 5 hours, 10 hours duration, I'll be using maybe starting my analysis from like the 4 hours or something. All right, so let's see how I'm going to do this analysis here. So on the 1 hour, look at what I'm seeing here on the 1 hour, guys. It's as simple as this. It's as simple as this, guys. What am I seeing here on the 1 hour? I'm seeing my higher high, higher low, higher high, higher low. Then I'm expecting what? A higher high here. So where is my point of interest? Where is my point of interest? My point of interest is what? The highest point here, the recent highest point, and then the recent lowest point here. That is my point of interest. So everything happening inside here is internal structure. So we can then go into the internal structure to see our market structure inside the internal structure. It's as simple as that. Go into the internal structure to even locate what market structure in there. And inside the internal structure, I can see this happening. I see my higher high, higher low, higher high, higher low, higher high. This one did not break this. This is not a change of character because this one did not break this low. So I can consider this higher low, and then we have what? Our higher high. And then what are we having? Higher low. What are we expecting, guys? I want an answer for us. What are we expecting here? What are we expecting? What are we expecting, guys? What are we expecting here, guys? Higher high. Exactly. We're expecting what? A higher high. And then we just, hold on. We're expecting what? This higher high. So, guys, did you know that I could literally do this? Just watch. Higher high. So we are getting this. We are really understanding this, guys. So I could literally go here to my what? I could literally go, hold on. I could literally go here, volatility what? 10-1x index, is it? 10-1x index, right? And I can literally come here like this and then put my barrier right down here. All right, look at this. This is even 98%. Now, let's say I want to take more percentage, right? I want to take more. Let me just do this. I can literally just do this like this, drag it down like this to have more more leverage. I want to trade no touch. This is 46%. Let me give it a little bit more space. This is 38%, approximately 40%, and I can just take this trade here. I can just take this trade for 40%. But then if I'm to follow my method, my strategy, I'm just targeting 10%. I'm just gonna drag this down like this right here, like this, drag it like this. I'm having more leverage. So I'm just gonna take this at 12.66% like this. I'm gonna take this like this for 2 hours trade because I know that this market is going to go up from here according to our analysis, right? Because guys, we have what? Now let's talk briefly about our order block and fair value gap because we have what? Another block here and a fair value gap that the market has actually even tapped into. So the markets were expecting it to go up from here. Now, to have more confirmation, guys, to get more confirmation, we are expecting to see what? A change of character on the smaller time frame. So how am I going to see that? I'm just going to go down to the lower time frame like this, guys. Go down to the lower time frame like this. Now, look at this. This is what I'm probably. Let's go to the 1 minute time frame to see this clearly. I'm going to go down to the 1 minute time frame, right? See, we are seeing this clearly right now. So if I'm to drag out my path on the 1 minute time frame, I'm seeing this lower low, lower high. This is going to be my lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? And then this is a high. So what is going to make me enter this trade is if I see a change of character here. I've not seen the change of character, so I'm not going to be entering this trade yet. I'm waiting for what? A change of character. We are waiting for this market to break through this level. The market breaks through this level like this. As you can see, it's giving us this. If it should break through this level like this, we're expecting what? A higher low like this, and then this is going to be the perfect time to buy this market to the upside. All right, that's your confirmation that this market has now changed, is biased to an uptrend. It's as simple as that, guys. It's as simple. And then if you understand this thing, guys, again, you don't have to understand every single thing. That is what I'm trying to prove to you guys. That even the knowledge of market structure alone is kind of enough to even trade a lot, right? Sir, with this strategy, can we use a top down? Can we do a top down from the 1 day time frame to the 1 minute? Exactly. You can do anything. Let me show you. And let me just do it and then analysis from the. Now, the reason I'm starting my analysis from the 1 hour time frame is because I'm taking a 2 hour duration trade on the touch stroke, no touch here. As you can see, look at this, my trade. I have 1 hour remaining. I am already making 10% already on this, my $100 trade. I used $100 to place this trade, targeting 13%, and I made 10% already. I can literally sell this and take my profit here, guys. I can literally do that. All right. And I'm probably going to take this trade, another trade on this one. I'm going to take this trade on this one. I am waiting to see a change of character here. Then I'm going to take the trade. So we're going to do a top-down analysis from the daily time frame. We're still going to do that. But then what I'm trying to prove to you guys is you literally can use market structure, the knowledge you have just with market structure, to be able to make consistent profit with this. Guys, let's say you want to just make 10%. Like, let me show you how easy this is, right? Guys, this is on Volatility Indices. Let's say you want to reduce the risk to as low as possible, right? You want to take 2 trades per day. You want to be targeting 10%. Let's do compounding interest, right? Let's do our compounding interest. Let's say you have $100 and you're targeting 10% per day, right? 10% per day. You want to do that for 20 days, right? 20 days, 10% per day. I'll show you how easy this is. This is $500 from $100. This is $572, approximately $600. Let's say you want to do that for 1 month, which is very, very possible. This is 1,600. Guys, after this our challenge, I'm going to create a signal group. By then, we must have understand how to take signals with this properly, right? And again, if you miss the signal, you just don't take it. It's as simple as that. All right. So I'm going to still create a signal group for, about that. All right. So I'm going to still do that. So if I want to just target 10% and I want to just take 2 trades per day, I'm just going to be targeting 5% per trade. Look at this one now. I'm just going to drag this barrier offset down even a bit more. as you can see, is giving me more leverage. So if I take this trade, I'm saying this market, I'm saying that this market does not, it does not go down like this, like this, like this, like this, till it gets to this level in the next 2 hours. It's as simple as that. That's what I'm practically saying here. And that is highly unlikely because we understand market structure. We understand market structure. We're following the rules. We understand market structure, guys, because we understand market structure. So let's go to introduction to order block and fair value gap. Now, before I do that, let's do top-down analysis for the person that is asking for from 24 hours time frame. So let's go to volatility 10 index. Again, you can do top-down analysis for any kind of market. Right, let's go to this. I'm going to do from the 24 hours time frame. And again, watch as I'm going to walk this down. As you can see here, I have what my, again, you don't have to let this confuse you. It's still the same thing. I'm just going to start my from here, my path from here. This is a lower low, this is a lower high. Again, this is not a lower low here. You want the one that breaks the structure, right? Break structure. I call this our lower low here, lower high. And then what are we expecting to see? We're expecting to see what? A lower low that is going to break structure. So we're expecting this to come down to this level. And again, you're expecting, so where's our point of interest? The lowest point there, the lowest point there, and then the highest point here. That's our point of interest. We're expecting this to come down and break the structure. I told you, whenever you open a chart, whenever you're seeing this, you are always anticipating a break of structure to change of character. I will always anticipate a break of structure first before I'm going to anticipate a change of character, all right? Except I'm going down to the lower time frame and then I'm seeing that a change of character is going to really happen, right? That's the main thing here. So what am I going to do? I'm going to go down, top-down analysis. I've seen what I want to see on the 24-hour time frame. What am I going to do? I'm going to go down to the 4-hour time frame. This is what we call top-down analysis. And what am I doing? I'm doing my analysis inside, all right, my point of interest. Inside my point of interest, all right? I'm doing this inside my point of interest, all right? So let's see what is happening here on the 4-hour time frame, right? Let's see what is happening here on the 4-hour time frame. Now on the 4-hour time frame, the same thing happening here. Just practice this so you understand how to draw your path properly. So I have what? My lower low here, my lower high, my lower low, my lower high, lower low. It has to break structure, all right? Lower high. This one did not break structure. That's why this is my lower low. This is my lower low because this one has actually broke the structure. Lower low, like this. Lower high, lower low. And then we have this change of character, right? Now, not all the time a change of character happens that the market wants to change its bias, all right? As you can see. But then this change of character, if you see this change of character on the smaller time frame, we can still take small trade to the upside, as you can see. But then we have what? This did not change character, right? This did not change character. We have this one that actually changed. Of course, because we have a change of character, we can then say this as our low. This one did not break this structure. Of course, after this change of character, we're expecting this to continue this to the upside. So after we see this change of character, we're anticipating a buy. All right, so we're anticipating a buy. So we see a change of character like this. In a buy in an uptrend, we're expecting what? Higher highs and higher lows. So higher low happened. It did not give us what? A higher high. It just give us a high like this, and then it gives us this. As you can see, the market was ranging around here, as you can see, and then it gives us what? Another change of character to confirm that the market has resumed what is downtrend, and then became so a lower low, lower high, lower low. We are expecting to see what? A lower high. We're expecting to see a lower high. Now, a lower high is currently happening here. A lower high is currently happening here because, of course, we still expect this to go up to this upside because there is what? Another block right here that the market needs to get to and a fair value gap. We are going to be talking about that here. So, but then where is our point of interest here? Our point of interest is the what? Highest point here, the recent highest point, and then the recent lowest point. See as I'm working my way down, all right? This is now, I now have my new point of interest. So let me get this off. So I'm going to go down to the 1 minute, 1 hour time frame. I'm going to go down to the 1 hour time frame and say, look at how everything is getting clearer. As you can see, everything is getting clearer here. My 1 hour time frame. All right. In my 1 hour time frame, I'm expecting what? Now, again, you have to keep note of what you're expecting as you are moving into the. Now, let me do this. Let me do this. All right. On the what is it called? on the 24 hours time frame, I'm expecting this to what break structure. It's a sell on the what on the daily time frame. So I'm going to put my notes here. Okay, it's a sell here. Okay, hold on. Let me try and use something else. Hold on. Let me try and use something that's going to make me be able to note this properly. Hold on. Okay. Okay, let me use this one. Okay, I'm expecting what? A sell, right? On the 24 hours time frame. This is how I probably would do it. A sell here. So I'm going to go down to the 4-hour time frame. Okay, sell. Let me label this properly. Sell on the 24, right? Sell on the 24. Now on the 1-hour time frame, on this 4 hours time frame, right? On the 4-hour time frame, I'm going to write what? I'm going to say this one is going to give us what? A buy temporarily, right? We're expecting this to, so I can say this is what? A lower low, lower high, lower low, lower high. So we're expecting what? Lower high. I'm going to label this like this on the 4-hour time frame, lower high. We're expecting a lower high on the 4-hour time frame. Then I go down to the 1-hour time frame. Now let's see what is happening on the 1-hour time frame. On the 1-hour time frame, just listen attentively here. See as I'm doing this, right? On the 1-hour time frame, I'm going to see this is a lower low, lower high. Did this break structure? Yeah, lower low, lower high. And then we have this lower low here, lower high, lower low. We have this high, we have this low, we have this. This is not the change of character because this one is not a lower high. It did not break this structure. Change of character would be when it break this one, right? So we had a change of character like this, right? Higher high, higher low. Did this break this? Let's assume it did. Higher high, higher low. We're expecting what? A higher high like this. So that's what we're expecting. But then let's confirm if this one broke. If this one broke that structure, let's confirm it. You always need to confirm that. Yeah, it did. It actually did. So, of course, so we're expecting what? We're expecting what? This to go up, right? We're expecting this to go up. So here on the 1 hour, it's actually an uptrend. Buy. We are expecting a buy on the 1-hour time frame, right? We're expecting a buy on the 1-hour time frame. We're expecting a buy on the 1-hour time frame. All right. We're expecting a buy on the 1-hour time frame. Hold on. So we're expecting a buy here on the 1-hour time frame. So what are we going to do? We are going to still now mark out what our point of interest. Where's our point of interest here? Our point of interest is what? The recent highest point here. And then the recent lowest point. Guys, see as I'm doing this, right? You see as I'm doing this. So I'm going to get this one off to keep my chart clean. I'm going to get this off to keep my chart clean. So I'm going to just go down to the lower time frame. I'm going to go to the 15-minute time frame here. See as I'm walking my way down. Guys, see as I'm walking my way down. Now we are going to understand this whole thing properly when we now start talking about what? When we now start talking about order block and fair value gap. Here, as you can see, I'm walking my way down, right? I'm walking my way down. Now here we can see this just as you saw in the 1-hour time frame, higher high, higher low, higher high, higher low, higher high, higher low. We're expecting this to give us a break of structure here. Now we're expecting what? A break of structure here. We're expecting a break of structure here. That's what we're expecting on the 15-minute time frame. All right, that's what we're expecting here on the 15-minute time frame. All right, so then let's zoom in a bit here, see what is really happening. Now, in here is internal structure here, as you can see. Now, in this internal structure here, of course, this is higher high, higher low. So in this internal structure here, we have the same thing happening here. We have what? Lower low, lower high, lower low. So we're expecting this to break here, at least give us this break of structure here, a change of character here to confirm it's an uptrend. So that's how we just work this whole thing way up. So we're going to be talking about, let's start introduction to fair value gap and order block. Well, we're going to start introduction to that. Hold on a minute. All right. So what is fair value gap? Now, before I talk about that, again, I'm still going to talk a bit about our upcoming challenge. Now, let's see what's happening on volatility 10. Let's see if 10-1x. Let's see if we can now take that trade. Again, like I said before, we're expecting what a change of character here before we can actually take this trade to the upside. So we're not taking that trade now. So again, according with our upcoming challenge, guys, again, we are starting on Thursday. I just really want to a quick reminder, we're starting on Thursday, and guys, you do not want to miss out on that. I'm repeating this and I'm saying this again because the only regret you're going to have, even if you join, is not joining with more, right? That's also the thing, because this is going to be epic. And this is how we're going to actually be trading this, and we're going to be using longer duration like this, targeting 40% every single day. So you do not want to miss out on that. Yeah, a separate group will be created for those that are already in the program, right? A separate group will be created, yeah. Because once in a while, we're going to be going live like this, and I'm going to be explaining the whole thing. So a separate group is going to be for update and everything, right? So a separate group is going to be created for those that are going to be in the section, right? So that's that for that. So again, I won't be waiting for anyone. We are starting on Thursday. Today is Monday. So if you're interested, please send me a DM so I can put you in the list. All right. So let's continue here. Hold on. Let me just reply this chat. Hold on. All right. So let's continue here. So what is fair value gap and order block? So let's talk about that. It's a topic that we are supposed to talk about a long time. So let's talk about that. Let's go to volatility 25 index. All right. What is fair value gap and what is order block? Now, one thing that people do not understand is for a market, see, there's something called efficient and inefficiency in the forex market. A real market has to be efficient. And what do I mean by that? Now, look at this. This is a real efficient market. It has to be like this in an uptrend, higher high, higher low, higher high, higher low, higher high, higher low. Higher. Now, this is what an efficient market will look like. Now, what makes this efficient? Hold on. Now, let me draw out inefficient market first so you can understand the difference. Inefficient market would look like this. Now, this is an example of an efficient and inefficient market. Now, what is the difference between these two? Both are uptrend markets. Both are uptrending markets, but this one is efficient and the other one is inefficient. Now, what makes this one inefficient? Because the reason this one is efficient is because this one has been completely filled. Now, an efficient market has to be what? Has to have no gap. As you can see, this one here, there is no gap in this movement here. The market move up. This market came down to cover all the whole gaps that can be inside here. Filled all the whole gap. It came back in to fill all the whole gap. That's what makes it efficient. To fill all the whole gap before it continue. It came back to fill the gaps, continue. came back to fill the gaps, continue. This one came back to fill the gaps in here, continue, going up. So an efficient market has to fill every gaps. And that's what we call a fair value gap. It has to fill every gap. Now, you still understand properly. Just hold on. Now look at this one here. Hold on. This one is inefficient. Why? Because there are still gaps. There are still gaps here. There are still gaps here that has not been filled. Now, whenever you see an inefficient market like this, chances are the market will still come back to fill in all the gaps. Now, let's assume there is a gap. I'm still going to show you how the gap looks like in the chart. There's a gap right there. There's a gap right there. Now, this market is supposed to come down and fill, right? It did not. It's supposed to what? Come down and fill. This is supposed to be how, this is how an efficient market is supposed to look like. But it did not fill those gaps. And then the market could potentially do something like this, come back to fill those gaps before going up. As you can see, it can come back to fill those gaps before it starts going up. That's why you're going to feel like, what is going on? This is an option. Why did the market just break through all these levels to come to this down before now start going up? Because there's a gap right there. There's a fair value gap there that the market needs to fill. The market will always fill the gaps. It will always come back to fill the gap. Now, let me show you how an example of that, how that is supposed to look like, or how that looks like on the chart. Let's go to the chart here. Let me get all these drawings off. Hold on. Let me just get this one off. All right. Let me show you guys an example of what a gap looks like. Let's go to the 24 hours time frame. Let me show you a perfect example of that. Okay, I've seen one that I can use as an example. Hold on. Now look at this. Now, how does a gap, a fair value gap looks like? Now look at this. Let me show you something. After this move here to the downside, this market came back down like this and started going up like this, going up like this. Now look at this. After this candle here, after this, how do you locate? I'm showing you how to locate a fair value gap. After this red candle, we have this massive candle, right? That just ran up, right? This green candle ran up, and then we have this. Now, where is the gap? Now, anytime you see something like this, you always see a fair value gap in C. Whenever you have something like this, there's always going to be a fair value gap somewhere around here. Anytime you see a turn like this, a turn like this, a turn like this, there's always a fair value gap around there. There's always a fair value gap around there. Fair value gap around there, around there. Anytime you see the market turn, changes its trend, changes its character, do something like this, higher high, higher low, higher high. There's a fair value gap at the bottom, fair value gap at the top, right? That the market will still sometime come back to fill. Right, so let's explain that. So how do you locate the fair value gap? Now, as you can see here, we have what the market did this, a turn, came down like this and go up like this, down like this and go up like this. So where is the fair value gap here? Now look at this candle here. I'm going to tell you why I'm not looking at it from this level, right? Look at this candle. You are going to take this candle, and this candle. Now, where is the fair value gap here? You're going to just mark this third candle and then this first candle. The gap inside here is the fair value gap. The gap inside here is the fair value gap. So we are going to locate few fair value gap in this chart. So we have located that one. So let's see another one. Let's just zoom in a bit, go back to the past and locate fair value gaps. Now look at this one here. Now look at this one here. I told you that the market after this higher high, higher low, there's going to be a fair value gap around here. Now, why is there no fair value gap here? Because all this one are completely filled. The market, they are efficient because look at this move here. After this candle, this move, this one came back to fill this move. There is no gap in this three candles. 1, 2, 3. There's no gap here. 1, 2, 3. There's no gap here. Now look at this one. 1, 2, 3. There's a gap there. Look at the gap. This one, between this one and this one, there's a gap. This here is the fair value gap. Yeah, I'm going to give an assignment on this. This here is the fair value gap, as you can see. Fair value gap. And look at this. It has been what? Filled, right? It came here, the market filled it up, pushed it back up, and then continue, right? But then look at this. Let me show you guys something. Look at when this market was going up. It's giving us higher high, higher low, higher high, higher low, higher high, higher low. This market, this move here is insufficient. This is an insufficient or an inefficient market. Example of what I drew there, because there are fair value gap that has not been filled yet. But if I see this, if I'm taking the trade to the upside, I know that at some point the market is going to still come down to fill in all these gaps. Now there are still gap here. Let's see if there's a fair value gap here. Look at this one. There's no fair value gap because 1, 2, 3. There's no gap in between them, right? So look at this one. There's actually a gap here, but it was filled before the markets continue moving. Look at this. There's a gap here, but the market came back to fill it, right? There's a fair value gap there, but it has been filled. So the market is efficient. This one, is there a gap here? After every higher high, higher low, then you should expect what? A fair value gap. There's a gap here that the market what has actually filled up, as you can see. So the market should always come back to fill a fair value gap to make the charts efficient, to make this market efficient. The market has to be efficient, all right? So let's check another example. Let's go down to the past. Look at this one now. There's no fair value gap here. 1, 2, 3. There's no fair value gap there. 1, 2. There's a fair value gap here, as you can see, that the market has not filled. But if you go back to the past, the market has actually filled it, as you can see. That's been filled. So the market at some points, look at this one. The market moves up to this level. You think the market is an option, but later it came back down to fill what? To fill the fair value gap. To fill the fair value gap. The fair value gap will at some point be filled later on in the future. All right. So let's see more. Let's try and find more. Let's go to where the market's currently at. Now look at here now. Look at here. There's what? A fair value gap right here. Look at this. After this, there's a fair value gap here. So what is this telling me? That at some point in the future, this market is still going to come back to fill this fair value gap. So I'm expecting, look at this. I'm expecting something like this to happen. Higher high, higher low. This higher high, higher low, higher high. This will happen before it start going up like this. So sometimes, guys, sometimes you see it's an uptrend, right? And then you see a change of character. Let me show you. That's why you need to understand everything. You need to understand Forex. You need to understand all these things. So if I see something contradicting my market structure, I know why. Guys, I know why it is contradicting my market structure. Look at this. Look at this. Sometimes I might have this higher high, higher low, higher high. If I now have a change of character like this, guys, if I have a change of character like this, I have something like this, it enter my fair value gap. I am not expecting this to continue going down like this, except there's another fair value gap down here that the market wants to come and take. All right. Now, this is contradicting what my market shows. This is a downtrend, right? That's telling me that the market has changed to a downtrend. But sometimes we are not going to see this. The market has already done what it wants to do. Come to what? Make this move efficient. Make this move efficient. The market has to be efficient. It has to fill in all the gaps. So anytime, guys, anytime you see all these big move, all these big candles like this, there is a fair value gap. Now look at this one, guys. Look at this one. Look at this one. Look at this one, guys. We have a gap here. A gap here. This is a gap here that the market will come back to. So fair value gap serves as point of interest. Anytime I note or see a fair value gap, I know at some point the markets will come back there. At some point in the future, the markets will come back there. It might not be immediately, right? It might not be immediately, but at some point in the future, it will come back. So I'm anticipating that, coupled with my market structure, I'm anticipating that. Now, guys, look at this. There's actually even a fair value gap here, as you can see. So this is telling me at some point in the future, this thing will come there. So it's possible that when we have a change of character here, this, like this, we have this change of character like this, the market might continue going down, which is still in line with what? Our market structure. Which is still in line with our market structure. Because there's a fair value gap here that needs to be filled. That this market has to be efficient. Now let's see if there's a fair value gap. Guys, let's see. Let's look at this move here. Now let's look at this. Let me show you guys something, guys. One thing you should always do is, guys, once you draw your path like this, we have what? Higher high, higher low, higher high, right? Right? Now, look at this one. This one is supposed to give us something like this, right? But then once I have this, right? This again is my point of interest, right? What I always like to do is I like to check in this move, are there fair value gaps in this move? Are there fair value gaps in this move? Here, let's see. Let's track if there are fair value gaps in that move. Let's see. Let's note them together. Let me take this line here. Now look at this. There's no fair value gaps here because there's no gap here. It has been filled. This is a gap here, right here. This is a gap right here, but the market has come back to fill it. As you can see, there's a gap here. The market went up, came back to fill it. Point of interest. The market will always come back to fair value gaps. So this is our higher high. Now, again, I was talking, we were saying something about how to note. Guys, if you remember, we were saying something about how do we know where the market is going to get to before it continues going up. You can use fair value gap. Aside from using the market structure, you can use fair value gap. As you can see, fair value gap pulls the market back in here, right? As you can see. Now, guys, we are still going to be talking about order block. Guys, that is another interesting. So there is no way we can talk about order block that we cannot first talk about fair value gap, because before you can note another block, order block is the most important here. But before you can note another block, there has to be a fair value gap there. That's why I'm talking about fair value gap first, because fair value gap is telling us that the market at some point will come back to that level. That's what fair value gap is telling us, right? That's what it is telling us. So let's continue here. Let's continue here. All right. So there's a gap here that the market has come back to, mitigate. So we have this higher high, higher low. So in this move, is there a fair value gap here? Let's see. We have, and how do you know it's a fair value gap? First, look at 1, 2, 3, right? Look at this. You can even look at this like this. There's actually a gap here, as you can see. As you can see, there's a gap here. There's a gap here. As you can see, there's actually a gap there. So, but then if I want to do this 1, 2, 3, I'm going to do it like this. There's actually still a gap there, even if you do it like this. So there's actually a gap there. I would do it like this. There's actually a fair value gap here. So we know that at some point the market will still get to this level. That's one thing I know for sure, that the market will get to this level. So look at this. If I'm to draw, see, this is what is going to later happen in this market. Look at this. This is what is later going to happen in this market. We have our higher high, higher low, higher high. At some point, we are going to see this is just stuff happening. At some point, we are going to have something like this. It's going to look like a downtrend like this before we now have a continuation like this. Because there's still what? There is still a fair value gap down there that the market has not filled. And if it has not filled it, there is nowhere it's going. It's coming back later in the future. See, this thing keeps going up like this. I know for sure that at some point, I'm going to show us examples, that at some point is going to come back down to that level. Let me show us an example of that. Let me show, and look at this move here. Look at this move here. Look at this move. Right? Look at this move. There are a lot of fair value gap here. The market actually came back down to clear everything before it continue what? Going up. Right? So that's what fair value gap is. That is what a fair value gap is. So we're still going to be looking at more fair value gaps. Let's just dedicate this section to talking about fair value gap. I don't want to talk about other block because other block is even more interesting. All right? Other block is even more interesting. So we're going to dedicate this section to talking about fair value gaps and all. So is there any other fair value gap in these moves up here? No, this gap, there is no fair value gap here. Okay, there's another one here. As you can see, there's another gap here, which means this market is still going to come down to fill all these gaps. It's going to come back to fill all these gaps. It's going to come back to fill all these gaps. It's as simple as that. It is as simple as that. Now, in talking a bit about other block, so we just have an idea before I'm not going to be talking a lot about other block today. I'm just going to talk a bit about other block. But in talking a bit about, can we check the lower time frame, sir? Definitely, we're still going to get there. We're going to come to the lower time frame. You can see, guys, all this thing works on all time frame. Whether you are checking on the 1 minute, any time frame, you are going to see other blocks. You're going to see all these things, fair value gaps and all that. Now, in talking about other block. Now, whenever you see a fair value gap, there is going to be an other block there. Whenever you see a fair value gap, there is going to be another block. Now, what is another block? Now, let me show you. Let me get this once off. Now, where's our fair value gap here? This is our fair value gap here. So if this is our fair value gap, where is our other block? If this is our fair value gap, now some people call other block supply and demand, right? I just like to call it other block. Whether supply or demand is still other block. It's still the same thing. Now, the candle, again, I told you to note your fair value gap, it is this 1, 2, 3. Right? 1, 2, 3 candle, 1, 2, 3 candle. The gap between this 1, 2, 3 candle is your fair value gap. Now, the first candle, the total of your first candle is your other block. So this candle here is my other block. This candle here is my other block. So your other block is your point of interest. Guys, fair value gaps help us to know that the market is going to come to this level. But other block is telling us that it is here the market is going to, as you can see, it is this other block the market gets to before it reverse. It gets to the other block, it reverse. Now, let's check other examples. Let's check other examples. I'm coming. Let's check other examples. Now, we know that this here, there's a fair value gap here, right? There's a fair value gap here. Where's then is our other block? Where then is our other block here? Where then is our other block? This candle is our other block. This is our other block. This is our other block. That is how you note your other block. Now look at this one here. Where's our fair value gap? Of course, there's a large fair value gap here. A fair value gap here. Where's our other block here? This candle here is our other block. That is our other block. That is just your other block. That is just what other block is. We're going to be looking at more examples, guys. We are going to be looking at more examples. We're going to be looking at more examples. Even if it's the same color as the other, yeah, even if it's the same color, I'm going to be showing you examples of same colors, right? I'm going to be showing you examples. So let's look at another, before we go down into small, okay, let's be on this one and just let's look at the lower time frames. Let's look at the lower time frames. Let's go like the 1 hour, for instance. Let's go to the 1 hour, for instance. Now look at this. Look at this move here. Are there any other blocks here? Are there any fair value gap here? 1, 2, 3. Look at this. There is no fair value gap here. There is no fair value gap here. As you can see, there's just a tiny fair value gap here. Of course, this is a fair value gap. There's a tiny one here. So if there's a tiny other fair value gap here, obviously there is what? Another block right there. So this candle here is our other block because there's a tiny fair value gap right there. All right. So let's see if you have, okay, as you can see, all this one are efficient market because there is no fair value gap. It has been completely filled. There is no what? This markets are efficient. This one is efficient. Look at this one. Is there a fair value gap here? Yeah, there's a fair value gap here. So if there is a fair value gap here, it means there is an other block right there. Where's our other block? This level. Is our other block. Now, this is what some people call our demand, our supply zone. This is what some people call supply zone. Right? Now, is there another block here? I mean, is there, as you can see, this is a fair value gap here. One. This was a fair value gap here. Now, sometimes the gap gets filled immediately. Sometimes it gets filled at the future a later time, as you can see. Now, one thing, the reason we don't use fair value gap, or I don't use fair value gap as my point of interest, the reason I don't use fair value gap as my point of interest is because, note, this is my fair value gap. Now, let me show you what my other block. This here is my other block. As you can see, the market respects other block more than fair value gap. Now, there are some instances where the market will just tap into your fair value gap and respects your fair value gap, right? Sometimes the market taps into your fair value gap, respects it, and keep going. All right. Sometimes it does that, right? But sometimes, most times, the market respects what? Your other block instead. As you can see, the market broke through this fair value gap and tap into our other block and started coming down. All right. Here, where's our what? Other fair value gap here. This is the gap. This one here. And this one here. There's a gap here, as you can see. So if there's a gap there, it means what? There is what? Another block right there. These are other block right there. These are other block right there. That's our other block right there. So one thing you should notice, guys, in a move like this, you can see multiple other blocks. Multiple other blocks. Now, once we get to other blocks topics, we are going to be talking about other block as a whole. Which other block is, if this market is going back up like this, if this thing wants to go back up, right? It wants to go back up. Which other block is it going to respect? Which one is it going to respect? Right? Which other block is it going to respect? There are different multiple. You cannot be selling once you enter into all this other block. No, you can't be doing that. You have to know how to recognize high value other block. And that's something we're still going to be talking about. That's not a topic for today. You need to be able to recognize high value other block. High value other block. You need to be able to recognize that. Right? So today is just to recognizing them. Next class, we're going to be talking about how to recognize what? High value other block, right? The ones that we're actually looking at. Not all other block are meant to be traded. Not all other block are what? Meant to be traded. All right. So let's see. Now, one thing you should know is, let me show you something. All right. Let's see. Let me bring back all those drawings. Guys, please, I want you to listen here, please. I want you to listen here. Let me just talk a bit about order block. One rule for order block. One rule for order block. All the information for free. Omo, God bless you. Even YouTube won't give you this kind of juicy information. Yeah, thank you for that. All right, so now one thing you should know is, guys, which order block? Again, this is just a bonus. We have not started talking about order block itself. We are still recognizing them, right? But then I just need to talk about this. Now, because, guys, I just talked about fair value gap here. I talked about the market has to be efficient. Guys, the market has to be, and it starts to be efficient. And for a market to be efficient, it has to fill all the gaps. It has to fill all the gaps. Now, again, it does not have to fill the gap immediately. It can come back at a later. Guys, note, the market could literally come here, fill these three gaps, continue going down, and later come back to fill this one and continue. It does not respect you. The market will not respect anything. Right? It does its thing. You just, guys, you are a follower. You are not deciding for the market. You are following it. But then the market has set of rules it follows. It knows I'm going to fill these gaps. I don't have to fill it right now. But then I know I'm going to fill it. No problem. But I don't necessarily have to fill everything right now. That's one thing we know. That it will fill it. But it necessarily does not have to be right now. All right? It doesn't have to fill it right now. So, guys, in helping us understanding this properly, where is the market likely, or which other block is the market likely to get to? Common sense, guys. This is common sense because we know that the market has to fill all this other block. Which one is likely has to fill all these fair value gaps? Has to fill all these gaps. Which other block is likely for the market to get to? This one, the extreme order block. So the market is likely to get to the extreme order block because in getting here, it would have filled all these ones and tap into this one. If you tap into this into this order block, it would have filled what? This gap, this fair value gap here. And then, of course, the market doing this, it is creating more gaps here too. And then the market continuing coming down like this is going to then fill all these ones. And then sometimes the market will keep filling all the gaps on its way down like this, leaving no gaps unturned. See what? We have what? A break of structure like this. See, we have a break of structure like this. It's as simple as that. Now, another rule for, so as the market fills the other block, the fair value gaps, at the same time, the other block and fair value gaps are still being created. Exactly. Exactly. Now, listen, let me show you, let me explain that again. The market wants to fill all these things. Because it moves like this aggressively, filling all this, that's created new fair value gap and other block. But there is no problem with that because, of course, it's still going down. It's a downtrend. It's still going to come back down and fill them. Now, if the market is now coming back down to fill these ones, it will not come down as aggressive as aggressive again. It will now be coming down slowly, filling all those gaps that is creating again as it's coming down along the line, filling them along the line, filling them along the line, filling them along the line. As you can see, filling them along the line to make this whole thing efficient, to make this whole market balanced. Do we understand that, guys? We just need to be able to recognize these things. Do we understand this, guys? Do we understand this? So let's look at more examples. Let's go to another market. Let's go to another market. Let's go to another market to understand this properly. All right. So let's say volatility 50 index. Let's go for volatility 50 index and see all this thing. All right. Let's see. Let's go to the 24-hour time frame. All right. Aha. Look at this, guys. Look at this. Look at this. Let's start from here, from the top here. Let's start from the top here. Is there a fair value gap here? Let me show you. Of course, there is a fair value gap here. There's a fair value gap here. Now, because there is a fair value gap here, this thing is telling me that at some point, the market is going to come back to this level. That's one thing. At some point in the future, it's going to come back to this level. Now, because there is a fair value gap there, automatically, anywhere you see a fair value gap, there is automatically another block there. The candle before, like the candle you use to mark out your fair value gap is what? Your other block. Others call it supply zone. This is my other block. Here. All right. Now look at here. Let's continue here. Let's look at this movement. We know there's what? A gap here. And as you can see, there are also other gaps here. As you can see, this is also between this one and this one is also a gap. Between this one and this one is also a gap. But this one is the one we are interested in, right? So we're not interested in all these ones, right? Can the market break the other block? I'm going to talk about that again. We are not yet talking about, we are not going into the depth of all these things. We are still working on locating and recognizing them. All right. I'm just briefly talking about these things. Now, look at this one here. Let me show you. There's an other block in this move. There's a fair value gap here. Look at this. Now, after, guys, immediately you see a push like this, a pullback. Anytime you see a pullback, you should try and recognize if there's a other block there or a fair value gap. Then there's a fair value gap here. As you can see, there's this gap here. Here. That's what. Because there's a gap here, we can even do this like this. There's still a gap here. Of course, we have, if there's a gap there, we have what? Another block there that the market actually gets into, right? So we're not going to be focusing on that one yet. All right, so then let's see. In this move here, there's a pullback here. Is there what? Do we have another block here? No, because there is no fair value gap here. Look at this. There is no gap here. It has been filled, right? This move here is efficient, right? There is no gap there. So we have this pullback again. Is there a gap here? There's a tiny one here that has been filled, right? As you can see, it has been filled here. Is there a gap here after this push? There is no gap here. Is there a gap here? As you can see, there is no gap here too. So you have to be able to recognize if there's a gap or no gap anywhere there. So if this market, as you can see where the market currently is, right here, is beginning to give us what? A change of character. Because let's see this. We have, yeah, look at this one here. Is there a gap here? Is there a gap here? Let's see. There is, but it has been filled. All right. As you can see, the market entered into this fair value gap here. So that it has been mitigated. So there is actually, once a market has been entered, has been filled, a fair value gap has been filled, it is no more valid. All right. That's not a valid fair value gap anymore. All right. But then look at what is happening here. This one is a very straightforward market. From here, we have our lower low, lower high, lower low, lower high, lower low, a high, a low. We are expecting this to give us a change of character. Now, this is going to be a change of trend. And where are we anticipating this to get to? We're anticipating this to get to this level because, of course, there is a fair value gap there that has not been filled. So here, this market is going to change its trend to what? An uptrend like this. See what? It fills that gap. If it now wants to start coming down, it can now go down. If it now wants to start continue going up, it can now continue going up. But then this gap has to be filled. Right? This gap has to be filled to make this market efficient. To make this market efficient. It's as simple as that, guys. All right, so I do not want to jam pack us with too many information at the time. So the assignment that we're going to do is, guys, the assignments I have for us is, guys, again, you necessarily might not have to get it the first time. You are prone to do mistakes. We are just happening to learn this for the first time. For many of us. So again, you don't have to get it the first time. So just go to how do you actually identify fair value gap? Again, let me talk about that. How do you identify a fair value gap? Let's look at another market. Let's go to Volatility 15 index. All right, look at this market now. Look at this. Why do you think this market is going down like this? Look at this. Why do you think it's going down? Let's identify if there's a fair value gap in this move. Let's identify a fair value gap in this move. Look at this, guys. Anytime you see this a sell to buy, we have the market coming down like this, give us this and this. You have to look at this move if there's a fair value gap there. Now look at all this place here. Let's start from here. There is no gap. There is no gap here. As you can see, no gap. Now, you have to choose any 3 candles. Let me put it that way. Choose any 3 candles. I'm choosing this one here. Look at, why am I choosing this one? Because after this one, now choose any candle that after the first one, there's the next one has this long candle, whether to the upside or to the downside, has this long candle. So if I say a long candle, the one before the long candle, the candle before the long candle is my first candle. The long candle is my second candle. And then the third candle is this one. This is the gap here. This is my fair value gap. The market is coming there. That is my fair value gap. And that first candle you note is going to be your order block. People call this one demand zone. So whether it's you call it demand zone or order block, I just like to call it order block. I don't like to call it supply and demand. Just use one name for everything, demand zone. So I know that the markets will get. Now, sometimes, guys, don't get me wrong. Sometimes the markets will just tap into your order block like this, will not get to your order block and continue going back up. It is still valid. It's not all the time, but most of the time. That is why order block is used most of the time. But then it is good to have the knowledge of fair value gap and order block, because once the market gets into my fair value gap and I'm seeing what change of character on the smaller time frame is showing that the market is respecting or fair value gap instead of order block. But most of the time, the market gets into what? A order block. It means the market has now closed or mitigates this gap. That's exactly what is happening here. Now, let's see. Are there fair value gap in this move? Yeah. Now, that is why I said in a move like this, of course, as you can see, this is just higher high. In a move like this, which order block is the most important? Listen, which order block is the most important? The extreme order block. Why? Because there is a fair value gap. Market wants to. A lot of people do not understand this. A lot of people that understand order block, but they do not understand fair value gap. They don't just understand why the market has to respect or why the market wants to come to the extreme order block. Because in this move here, there's an order block in there. We're going to see a lot of order block in this move here. Let's see if there's another order block here. Hold on. You have this one. Okay, look at this. Again, I said to note your fair value gap, you have to look at the longest, that candle that moves very fast, that's the long candle. It doesn't necessarily have to be this one, guys. Look at which one is the longest candle here. Look at this. After this move here, after this impulsive retracement, after this higher low, this move here, which is the longest candle, is this one. So it is the candle before the longest candle. I'm going to count that by 1, right? 2, the longest candle is the second one, and then the third candle is this one. So there is actually a fair value gap right here that has not been mitigated. And where is my order block here? Guys, watch. Here, the candle before that one is my order block. But guys, look at this. The market, guys, if you do not understand the concept of fair value gap, guys, the markets will get to you. This is exactly what I'm saying. The market will get to your what? Fair order block, give you a push. It's going to look like the market wants to start respecting your order block. The market has gotten to my order block. I want to start buying. But look at what happened. Breaks through it. Why? Because there is another fair value gap down here that the market needs to fill. Do we understand this? I don't know if you guys are understanding this. I don't know how else to stress this. Are we understanding this, guys? Do we understand this? I want answers for us. Do we understand this, guys? Yes. So what order block? Now, when people are talking about, because order block is more popular than fair value gap. Why? Because fair value gap, most of the time, like I said, it is not the fair value gap that gets respected. Look at here, guys. Let me show you something. Let's assume this fair order block is going to be respected. Of course, look at the fair value gap here. This space in here. Let me get this off. Hold on. Hold on. Guys, look at this. This is my fair value gap here. But look at what happened. The market did not respect. Even this push here, of course, the market get a push when it gets to my order block. But even the push the market gets, it did not respect the fair value gap. It is the order block it respects. So people are not really taking fair value gap as important because they think the market doesn't respect the fair value gap. But order block is useless without the fair value gap. And if you do not understand the concept of fair value gap, you won't even understand order block. You won't even understand what order block to be looking at. You won't even understand what order block to be focusing on. Now, this market, this one here, has to get to the extreme because this market has to be filled. It has to be efficient. Now, look at this. Let's see. There are multiple order blocks here. This is another block, but this other block here, as you can see, there's a fair value gap here previously, but it has been what? It has been filled, as you can see. Look at this, guys. Now, this is exactly what I'm saying. This is why people hate fair value gap. Look at this. The market moves here. It created a gap here. The market came back in here to enter our gap. It respects our gap here, right? It did not even enter our order block here. But look at what happened. It pushed it up. Now, you would have entered the market here because it entered. If you are trading just fair value gap, you would have entered the market and put your stop loss just below the fair value gap. But look at what happened. The market came back. And then, what did it do? It came back to respect what? Our order block. It came back to respect our order block. So people hate fair value gap because of this reason. Because the market doesn't really give a fuck about fair value gaps. But they are important because without them, you cannot locate. There is no order block without fair value gap. But the market respects order block more. Look at this. The market came into our fair value gap, push it up, came back to respect our what? Order block before it start going up. Now, let's see again. Is there a gap here? Definitely there is a gap here. And then if once there is a gap, of course, there is what? Another block there. Now, this is what I talked about before. That look at this move alone. This move here. Let's assume this one has not happened. Look at this move. How many other blocks is here? We have 1, 2, 3, 4. We have 4 other blocks. But which one are you expecting? Now, guys, this is very important. Please listen attentively here, guys. I want you to listen attentively here. Now, let me show you something. To show you that, look at this other block here. This one is no more an order block. Why? Because it has already been mitigated, right? Once you see an order block getting into or mitigated, it is no more valid. And let me show you an example why it is no more valid. Look at now, when the market now started coming down, even if this order block is not a valid one, even though it is not the valid order block, the market still reacted when it got there. The market got reacted when it got there. Right. But look at this one. Because this one has already been tested. that's already, it's no more a valid order block. Look at how the market just went through it. There's nothing stopping the market. This one has no power. It has already used this power here. Look at how the market reacted when it got to this one, because of course there was what? A gap here. There was an order block here. The market, rejected here. And then it went through this one because this one is no more valid. And then it got to this one that is still valid. And it got a rejection here again. It got what? A rejection here again. And then it is coming where? Here. Now, the most valid order block is the extreme order block. Let me unlock. Let me see if we are following. Let me unmute us. Let me allow us to be able to unmute. Now, again, I'm going to ask a question. I'm going to see if you are following. Now, the most valid order block is the extreme order block. Why is the extreme order block the most valid order block? Can someone tell me? Why is the most extreme order block the most valid order block?
Because it has to come down and fill that gap.
Exactly. Because the market needs to fill that gap. And that is what makes it the valid order block. That is what makes it the valid order block. Very simple, guys. Now, another thing that makes an order block valid, another thing you should note, because sometimes the market cannot be this clear. Sometimes. Now, another theory that makes this order block a valid order block, that makes this a valid, is the order blocks that breaks structure. Now, look at this. Let me show you. Look at this move here. Here we can say this as our what? Higher high, higher low, higher high. Where's our break of structure here? Sorry. Here is our break of structure. Right? Here's our break of structure. Now, look at this. Which other block? Now, once you see or note your break of structure like this, you are then going to trace down that which other block broke this structure. Which other block broke this structure? It is not this one. It is this one. Because this one here is the one that broke the structure. Why the market is not respecting this one is because it is not this one that broke the structure. Now, this one is the one that broke the structure. It means this one has more power. Let me put it that way. It has more power. It has more say in this move. Because it is this one that broke the structure. That's what makes it valid. The other block that breaks the structure is the most valid other block. Is the most valid other block. Now, again, guys, one thing you should understand is forex trading is no respecter of any man. Guys, do you know that if we go back in time, we can still see other blocks right here? Let's see if we can see other blocks here. There is no other block here. Now, there's another block here. Look at this. There's another block here, which means there's a fair value gap here, which means there's another block here that has not been mitigated. Now, it's two things, guys. Listen, does it mean that the market is going to now come and fill everything? Does it mean it's going to come and fill everything? No. Some might say, are you crazy? But you said everything has to be filled. Why then won't this market come and fill this one? Now I'm going to show you. I'm going to tell you why. Just listen. Is there fair value gap here? Let's see. This one has been tapped into. 1, 2, 3. As you can see, guys, as long as it has been tapped into, is no more valid. Here it has been tapped into. As you can see here, this is an instance where the market respects the what? Fair value gap instead of the other block, right? It moves up, it entered. If you go down into the lower time frame, you're going to see this properly, that the market taps into what? A fair value gap and continue going up, right? So it's no more valid. That one is not valid. All right. So let's see. Let's go down in time. Is there a fair value gap here? Yes, there is. Does it mean there's another block here? Obviously, there's another block there. If you go down, you're going to see instance like that. Now, does it mean that the market wants to now come down? No. Why then? The question is, if this market is not efficient yet, if it's not completely filled, why is it that the market... Now, guys, the reason my teachings are very top-notch, the reason I answer all these questions even before you ask it, is because these are the things that I struggled with. I am a deep thinker. When I was learning all these things, these are the things that fucks with my brain. Like, but you said this market has to be efficient, and there are still other blocks right there. Why is the market not coming down here to fill all these things? Again, the market not coming down to fill all these things does not necessarily mean later in the future it will not come down there. Now, again, that is not a solid excuse. It is not solid enough. To me, at least, it is not solid enough. Now, one thing you should notice, once you see a major break of structure like this, I am not concerned about the other blocks below. Because, of course, this whole market here can still turn into a downtrend and the market can come back to fill all these things. Or not, or never. Sometimes, guys, it is the first trading. Sometimes the market has not come back to fill this thing. It might not see. You might open a trade right now, but open a chart right now, go back in time and see one other block long time ago that the market has not even come back to. Now, again, that still does not mean the market will not come back later in the future. The market is constantly moving. It's constantly moving. It does not mean that it will not come back later in time to fill that other block. Now, but then I'm not going to be worried or bothered about some past years ago backward other blocks. No. Which one am I concerned about? The one that broke what? A major structure. If I'm to draw my path here on this higher time frame, I'm drawing it like this: higher high, higher low, higher high. I'm worried about the extreme order block in this move. In this move. That is the one I am worried about. Not some later one. This one has done their own. Like after this, they should have come back to feel it, that they didn't. So which one am I worried about? This one here. This one here. This is my point of interest, not this one, not this one, or this one, this one. Now, again, that is the reason we have, I'm talking about having multiple confirmation, because even if the market gets to my order block, I am not just jumping into the market to start buying. I am waiting for what? A change of character on the smaller time frame. I am waiting for a change of character to give me a confirmation that yes, the market is respecting this order block. Now, looking at this one here, you might see, let's go down to the 1 hour time frame here. Let's look at this order block. Let me show you something. I'm going too far into the order block. Now, if you look at this on the 1 hour, look at this. If I'm to draw my path here, and that is why you need to understand the rules of order block. I have my lower low, lower high, lower low, lower high, lower low, lower high, lower low. We have this high, we have this, and we have what? A change of character. We have a change of character. This is to show us that the market wants to change its trend. And it did that at what? Another block. It gave us a change of character on the 1 hour time frame at another block. This is going to give me like, oh, the market wants to start going up. It's a change of character. I'm expecting what? This, and I probably would have started buying at this level, right? But look at what happened. Boom. And the reason this happened is because that is not, you need to understand the rules of order block itself. You need to understand which order block is valid. So sometimes the market gives you a fake shit like this on another block that is not valid. And then you enter the market. Now, again, seriously, sincerely, even me myself would have thought, let's say I do not really understand the rules of order block. This one is enough for me to enter this trade. Trust me, it is enough, right? It is enough for me to enter this trade. Now, let's assume I enter this trade. And what will make me enter this trade? I'm looking for what? And what? Order block here. Is there an order block here? Again, you want to check the criteria for checking an order block. Do we have an order block here? Let's see. Yeah, we have another block there because this is a small gap here. So I probably would have been a victim of this. I probably would have waited for after this change of character, right? I probably would have waited for what? The market to tap into my order block on the 1 hour time frame and wait for this. I probably would have gone down to a smaller time frame to even see a much more confirmation. But then let's say I enter this trade here. My stop loss would have been somewhere around here, and then I would have entered this trade and I would have lost. Now again, that is why forex trading is not 100%. Now that is assuming I do not understand the rules of order block. I would have taken a small loss right there, which is normal. You cannot win 100% of the time when you're trading. Now, does it mean that this strategy, market structure, does not work? No, it does work. It does work. Just that sometimes there are other rules that counter whatever rules you're working with. And that's why you cannot be 100% in forex trading. But then, if you had known that this other block is not valid, if you had known that this other block is not valid, that the extreme one is the one you're looking at, you would have not entered that and you would have not been a part of that mess that's happening in there. All right, so this here would have been our valid order block. So that is that for this. That is that for this section. In our next section, we're going to be talking more on order block. And now again, for our next section, where we're going to be talking more on order block, I'll be doing that in the VIP group. So if you're not in the VIP group, you're going to be missing the part 2 of fair value gap and order block. I'm going to be showing you guys more rules to solidify order block and fair value gap. More rules, entries, and all that, and how to do all that, how to enter. We are going to be we are moving gradually into entries. So we're going to be doing part 2 of fair value gap and order block, and then that part 2 is going to be in the VIP group. So if you're not in the VIP group, you're going to be missing the part 2, and trust me, it's going to be crowning order block. We're going to be understanding it properly because this is just the surface level of order block. I talked more a bit about fair value gap today to order block. So in the next class, we're going to be talking in depth about order block, all right, and how to recognize and how to trade them and that. See, guys, there are trading techniques that we use just order block to trade. Just note order block. Market gets to there, you buy or you sell. Once it gets your order block, you don't even need to wait for other confirmation. And I'm going to be showing you how to do that. How to do that. And that's what we're going to be doing. Now, for those that are interested in our challenge, again, we're starting on Thursday. Today is Monday. So again, send me a DM now with how much you're going to be interested in. You do not want to miss out on that. Again, by the time we get into the challenge, we started and everything, the only regret to be you not joining or you not joining with more even. So I do not want you to miss out on that. That will give you enough capital to trade with, to do a lot of stuff with. You do not want to miss out on that opportunity. You don't want to miss out on that. I'm stressing it enough. All right. I have people already sending their funds and we're going to start depositing by tomorrow. There's a group created for those that are in the program. I'm going to be adding them to the group, and then we're going to be addressing the group by Wednesday or Thursday. All right. So that's it, guys. I hope we are been able to learn more about fair value gap and order block, and all this knowledge. Again, they are for free. They are top-notch knowledge, and I'm giving out for free. Again, it is not about the money for me. It's about being able to pass out the knowledge as it is. These are the things I struggled with while I was learning how to trade, and it made me lose a lot of money. And I literally could do all these things for free, but people just don't take free things seriously. As you can see, we have over 100 people in the group, and then just 16 participants here. And as you can see, all right, so that is it for that. I'm going to be ending this section now. The section is being recorded. I'm going to post the recorded version in the on YouTube. So if you're watching on YouTube, please hit the like button and subscribe to my channel. It's really a way to support so I don't want you to tire. God bless you, sir. You're welcome. So it's a way to support my channel and all that. So that's it, guys. I'm going to be ending this section tonight. I might really have another class for those in the VIP group today. I'm not entirely sure yet. We're going to be talking more about our And then I think the trade I took we are done with the trade, and I've made my 13% profit today on my $100. That is $13 profit today. That's amazing. All right. So assignment. So just go and locate fair value gaps, and then the other block and post in the group. Locate fair value gaps and other block and post in the group, and then I'm going to review them and